Move on. Cholamandalam investment. Well, the quarter two performance was very, very strong. Loan growth came in at the 7-year high. Assets under management as well has seen a stellar growth, more than 40%. Disbursements are strong, while net interest margins also improved. Mr. Arul Selvan, the President and Chief Financial Officer at the company, joins us on the show. Good morning, Mr. Selvan, and thanks so much for joining in. And congratulations on a good showing. Let's take a couple of aspects first out. Your AUM growth has been fairly good. What kind of a growth momentum are you looking at from here on? And also the new business, well, as a percentage of disbursements, are more than 20%. As a percentage of your AUM, how much will it contribute? What's the target out there?
Yeah, I still maintain for the full year a targeted AUM growth of anywhere in the range of around 25 to 30%. This is primarily coming from the fact that last year, Q3 and Q4 were strong quarters. So even if we clock a good growth in the next 2 quarters, our growth will sort of moderate to reflect a 30% growth at best. So we are targeting around that levels for the full year. On the other point on the new businesses, over the next 2 to 3 years, we expect the new business share to be around 20% of the overall AUM. We will have vehicle finance in the range of around 50% plus. It will moderate from the current 60% to around 50%. The LAP and the home loans will take the balance, which will be another 30%.
Okay, Mr. Selvan, on the new business, there are some concerns with regard to the asset quality. So could you give us some more clarity out there? How is the asset quality shaping up in the new business? And how is the yields different from your existing business?
So we have 3 new businesses: the SMEs segment, then the CSL segment, which is the unsecured segment, and we have the SBPL, which is a mortgage to the lower end of the strata of self-employed non-professionals. In the case of SME, the yields are very fine because we are targeting, somewhere at the top of the pyramid type of SME customers, one notch lower where the banks are there. We are there in that segment where yields are very fine. But credit tested customers, and we feel there the returns on at a NIM level would be lower, but at an overall level we still will clock a reasonable return to sort of fuel our profit growth. The CSL business is an unsecured business where we are trying 2 different formats right now, which is some part through the fintechs and some part through our own traditional model where we have our own people going and meeting the customer and canvassing business. In both the cases, the yields are fairly high and sorry.
Please go ahead.
The yields are fairly high and we are seeing good traction there. We are watching the credit cost and delinquencies. The delinquencies, while it had moved up compared to what we had done over the last few quarters, it is still much lower than overall industry averages. And we are confident that we will continue to be below industry averages. I think we have even sounded out that initial years the delinquencies will be lower, and we expect it slightly going up in the future. The SBPL right now is a very small volume, and there the yields are high. Sorry, I was just covering the 3 parts. My apologies.
Yeah, no, absolutely. Sorry, the second part, the unsecured, what do you call it, sir, Mr. Selvan?
We call it a consumer and small enterprise loan. Because here again, the target segment is the business segment.
Yeah,
it's not like
that is where these increases in a little bit of asset quality issue is coming, right? That particular segment. So what is a comfortable level here in new businesses? What would you be willing to sort of suffer in that sense? Go up to
at a 90 DPD level, it should be slightly in the range of around 2 to 2.5% would be what would be comfortable.
So you're at about what right now? 1.5%?
Yeah, we are at around 1.5%. Yeah.
So you're saying you'll be willing to go up to about 2.5%?
Correct. But we are providing at a much higher level there. So if you look at the provision coverage there, it will be in the range of around 70%. So we are comfortable doing it at that level.
And you're saying that these new businesses should go up to, you said 30% over a period of time?
20%.
20%, sorry. 50% is vehicle finance, 30 is LAP and housing, and remaining 20 is this.
Okay. What does all of this mean for your overall net interest margins, Mr. Selvan? So, on a quarter-on-quarter basis, your margins have improved, but how do you see it pan out, and have the cost of funds bottomed out?
Yeah, we are fairly confident that from here on we should have a better cost of funds, and unless something changes in the overall market environment or at a global level as well as at the domestic level. So we should see some improvements on the cost of fund side. And yields will also improve because progressively the fixed rate book, which is the vehicle finance book, we are repricing and we will see some yield improvements. Though it would be of, it will be a very slow progress because it will take another 2 to 3 quarters before you will see a visible change. There's small changes you would have already noticed that we have reported.
I also want to ask you about the, if you have any plans to raise funds, what would the amount of funds be that that you need at the moment, and what are we looking at in terms of a timeline?
If you are talking equity, we have already raised the funds, though it came in the first week of October. We have raised 4,000 crores 2,000 crores by way of equity and 2,000 crores by way of compulsorily convertible debentures, which will get converted over the next 2 to 3 years. So from an equity side, we are fairly comfortable from a capital adequacy or a debt equity, leveraging context. If you're asking about the debt, yes, we constantly raise debt. Our appetite would be to raise around anywhere between 5,000 to 7,000 crores every month. So we will continue to do that. We have multiple sources, banks, markets, money markets. We have also tried public debt. We have done some public debt out there. So we will continue to raise debt side through these sources.
All right. Right. Mr. Selvan, the last time you joined us, you told us the cost of borrowing is likely to have bottomed out and NIMS will improve, which did happen. So good on that. But could you give us a number? What's the outlook on NIMS from here on? Point number one. And point number two, the cost to income ratio, it went a little bit higher because of a couple of expenses that played out in the last quarter. Where does that number stabilize at?
NIM, I will not right now want to commit a number, but as I said, directionally it will improve because both cost of funds would come down and yields will increase. But as I said, it will be progressive in the sense there is a little bit uncertainty about the prevailing cost of funds in the market. It's been very volatile. We will have to watch for another 1 or 2 quarters before we get a firm grip on whether it's directionally southward bound. With regard to your next question on cost to income, yeah, the OPEX. Yes, OPEX has gone up. I mean, there's a little bit of a shift between line items because what we traditionally used to keep it as an outsourced cost within our own system. We used to have the feet on street outsourced through another company of us. We brought all the employees or most of the employees onto our Chola payroll itself. So you will see the employee cost going up, but the other costs coming down. Overall, there would be, more or less in line with the AUM growth, the cost to income, the cost to asset ratios has moved up. Yes, we do have a slightly higher cost to income ratio. This is primarily because we focus on having separate teams for each vertical, and even within each vertical, we have separate sales, credit, and collection teams, and these do add to the cost, but it gives us better underwriting, better yield, and better collection efficiency. So we continue to follow that process of having slightly higher manpower. But overall target is to keep it within the 3% to average assets limit, to give you the answer on that.
Okay, Mr. Selvan, we'll leave it at that. Thanks a lot for joining in. That's Cholamandalam Investments. Strong disbursement growth is what they've seen, and that was the outlook on their business. Let's take a quick break. The markets are looking quite good, actually. 100 points higher on the Nifty now.